Welcome, ladies and gentlemen, to Commodity TV. And honestly, it is like 2 years, the first time now that we are again live in our Munich studios here. And with me here is the rock star of uranium, Amir Admani, the CEO of Uranium Energy Corporation. Welcome, Amir, and great to have you here in person finally.
It might be dangerous to be a uranium rock star in Germany. That might attack me. But
No, you are in Munich. You are safe.
Okay,
No problem.
right.
That's fine.
It's good to be here.
Yeah.
It's good to be here, Johan. It's been a couple of years of not getting out to visit with our shareholder base here in Munich and in Europe, and it is just nice to be back. And so much has happened with the company, so it's great to be able to bring real news, real updates, and it's an exciting time.
Yeah, absolutely. Exciting time also for your share price. I remember we have been like two and a half years ago. You have been with me in Munich and the share price was around, I think, $1, $1.20.
Yep.
These days you trade $4.80, $5, $5.20. So you really anticipated the nice market move in uranium. This morning we were at $62.
Yeah.
But I think you also very wisely used the time when we had the nuclear winter in the prices. So I think that your strategy starts to pay out.
Well, as painful as the bear market in uranium was, it completely made sense that we were going to come out of it at some point. And so it wasn't an if, it was a when. And the reason is that over the last 8 or 9 years, over 60 new reactors were connected to the grid. The world continued to build reactors despite the so-called nuclear winter. And they continue to commission new ones. Even as we speak, there's over 50 reactors under construction. And so from a common sense point of view, you look at that and you say, hey, demand is growing. It continues to grow. Yet not a single new uranium mine is built in the last decade. If anything, we had production curtailment. And some of the world's biggest mines, like Cameco's McArthur River, they were shut down. And so it was, in my opinion, and in our company and team's opinion, we had high conviction that this had to turn. And at some point, and as you know, we had a very strong acquisition strategy during the bear market. We tripled the size of our resource base until last year. And we entered last year and continued to assess the landscape and realized, you know what, uranium at $27 a pound is well below what the global uranium industry cost of production is. And so let's buy physical uranium.
Yeah, I think super smart move, by the way.
Assets. We put together a portfolio of 4.6 million pounds of uranium at $36 average cost per pound. Uranium's at over $60 a pound today. So we have well over $100 million of unrealized gain in that portfolio alone. Every $10 move in the uranium price, there's an extra $50 million of gain in that portfolio. And that wasn't the only thing we acquired last year. We also acquired a company called Uranium One, one of the largest, if not the largest, uranium companies in the United States, which ironically was owned by the Russian government. And I say ironically, of course, because of all the geopolitical events and turmoil that have unfolded here.
Yeah, absolutely. I think that was also a great thing because now you have like 2 production facilities, right? You have your Wyoming and Texas. So production, that is key. Those are the questions we get very often from our viewers. I mean, you can basically, let's say, maybe not press the button, but it takes you, let's say, maybe 6 to 9 months and you could be back in production.
Look, and as you've heard me say, majority of companies in the uranium sector today are still in the midst of permitting. Okay, construction hasn't even begun. There is not a single brand new uranium project under construction. This is again an industry that was in a deep bear market status, and so as a result, today to be in our shoes, where our company has 2 fully built, fully permitted, ready to go processing plants with 8 fully permitted uranium projects ready to go, 2 of which were in production over the last decade, our Palangana project and the Christensen Ranch project we acquired from Uranium One. This is a very unique position to be in. And so the position where we're assessing and evaluating and hiring and getting ready for production, most uranium companies, as I mentioned, are permitting. We're getting geared up for production. And so that in itself is a very unique advantage. It's a time advantage that we have. But at the same time, we don't want to rush out there and start selling uranium at $60 when we truly believe prices are going over $100 a pound. And so we have been preparing for production for really a number of years. Earlier this year, for example, a year ago, I'm saying earlier this year, a year ago, we started drilling and developing our Burke Hollow project in South Texas. That is the only new uranium mine that has been discovered in the US and is being developed today. Of course, with our acquisition of Uranium One, we have a whole new business that we're integrating into our business. And you know, Johan, 17 years ago, when I started UEC, we were Texas focused and we went into production in Texas. And I always felt the future of uranium mining, if you wanted to be the top US uranium mining company, you had to be in Texas and Wyoming. And who was the best and biggest company we could have bought in Wyoming? Russia's Uranium One. And so now that we've made that acquisition, we have not only 2 production platforms, these are hub and spoke production platforms, which means you have multiple projects feeding into one centralized plant. That means there's scalability, there's room for growth. But most importantly, why Texas and Wyoming? These are the 2 states that are in situ recovery type of geology. Geology that could be mined with in situ recovery is available there. And both Texas and Wyoming is state-only permitting for future development. We don't need to go to the federal government agencies for any of our permitting. So really, these are the best jurisdictions geologically, infrastructure, long-standing history of uranium mining, and moving forward, business-friendly, energy-friendly, state support for development of the industry. What else can you ask for?
Yeah, I think a perfect game plan, definitely. I think you can produce from both sides then approximately 6.5 million pounds per year.
That's what we're licensed and installed capacity combined right now is 6.5 million pounds per year.
Exactly. So how does your resource look today? I think you brought out some days ago a new statement already for some historic resources, which are now really compliant with the ruling today. So if we put everything together, for how many years you can produce, given the fact that by now you're, let's say, permitted for those 6.5 million pounds?
Well, let me speak to this recent news because I think it's very exciting and it really builds on our acquisition of Uranium One. Just recently, we have released our first SK 1300 report. Now, for your audience, this is a terminology they should probably start to get used to. Australian companies report JORC resources. Canadian companies report 43101 resources. In the United States, the SEC has developed a new policy, and that policy is now to report SK 1300. That's the name of the policy for mineral disclosure. And as an American company, as a New York Stock Exchange listed company, we're now reporting our resources under this new guideline. And so we've reported just about 70 million pounds of resources just in Wyoming, combining our previous uranium holdings in Wyoming, our Reno Creek project, with the Uranium One portfolio that we acquired. This is the largest SK 1300 report for uranium reported in the US. This is truly one of the largest resource platforms in the country. It's a hub and spoke. So the hub is the Irigaray plant. And again, the projects that go with it. There's also 100,000 acres of land for exploration upside and potential, again, all within the state of Wyoming. So when you look at the production profile that we can build here, and that's just, again, what we have in Wyoming. The company has additional resources in Texas. And so when we look at total resources, I believe we have the potential within various categories. And again, we're trying to convert resources into SK 1300, but we should be well north of 150 million pounds of uranium as we continue to convert. That gives us a very solid foundation of mineral resources, most of which is fully permitted. Again, that is the key word here. And from there, you can see we can really support a strong, robust production profile for a long time to come. And we're not content at 6.5 million pounds of annual production. We have plans underway right now to double our permitted capacity in Texas, double our permitted capacity in Wyoming. So this is not static. You know, currently there's no uranium mining in the US. We're in the lead position. We are in the position to take US production higher and be the biggest player there. But even so, we are still poised for so much more growth. And we're hungry for growth. We're a company that's 17 years in the making, and we feel today we have the team, the resources, the inventory, everything, the balance sheet and I know you're going to touch on it, but all of this has to be supported from a strong place of financial position. And so today, to be a debt-free company,
we love that,
and to have over $120 million of cash and liquid assets on our balance sheet, and a big portion of our capex is already done, completed. Our processing plants are built.
Plus the 4.6 million pounds uranium.
And I'm not even talking about that. The $100 million of unrealized gain is on top of that potentially. So yes, there's ample financial strength here to support the very ambitious plans that we have for this company.
Super. One last question, because I'm also personally interested in that. You have I think it is the largest titanium resource in the world even. Yeah,
Yeah.
So what are the plans there? Because it sounds to me like a little bit more, you know what, we are the largest uranium company in the US. We will be the largest producer quite soon in the US. Is there still space for titanium, or could you imagine, let's say, to spin that out, to sell it, or bring a big partner even? Because as far as I know, titanium prices are at an all-time high.
Titanium prices are at an all-time high, and there's obviously a very strong demand for industrial commodities like titanium. And the Alto Paraná deposit is very special. It's just under 5 billion tons of very high grade, over 7% grade TiO2, and the mineralization starts at surface and goes down 15 meters. It's just a world-class deposit in any way you look at it, and it's got proximity to renewable sources of energy, which is really important for developing those types of projects. Truly it's taken a back seat in our portfolio because we have been so focused on everything I just told you that we've developed. But again, and while our plans with Alto Paraná have taken a back seater, this is an asset that we own, and it's very strategic in terms of something we can unlock value from that's not related to uranium, but it can be monetized attractively. So again, to that end, we have re-energized our plans for Alto Paraná by reintroducing an initiative to complete some economic studies there. So if we are to sell it or spin it out, we have a strong base of information to do that from. Again, this is a project that I think, had we not been maybe focused rightfully on so much of our uranium growth, we would have been advancing faster. However, it's there. It's still a very big deposit. It's still the same resource in the ground. And it still is a really unrelated opportunity to uranium that we can derive value from. And that's the nice thing and the very unique thing about the UEC business, that UEC is not a one-trick pony. UEC is not just one deposit. UEC today is a company with 2 production platforms, multiple fully permitted deposits, a pipeline of uranium projects for exploration and development from Canada's Athabasca Basin to Paraguay, plus the titanium asset, plus our 18% equity interest in Uranium Royalty, the only royalty company in the uranium sector. And that has also been a source of value creation for us. So you add it all up, and this is a portfolio and a company that can deliver value in many different ways moving forward.
Fantastic. So we could say that's maybe a plus $100 million joker?
Yeah, I don't know. You call it whatever you want, but it's going to be really the same way that in the last couple of years it's been really a winning formula, and it's delivered real results for our shareholders after a tough bear market. As you mentioned at the get-go, to go from $1 to $5 in the last couple of years, a lot of that growth really just even in the last year is demonstration of the fact that we really have the right assets, the right portfolio, I believe the right strategy. And now with all the geopolitical events in the world, with all the turmoil, what Russia has done with Ukraine, US assets will really trade at a premium. This is the biggest market for uranium consumption in the world, and there's no uranium mining in the US. That's crazy. And the government is realizing to that conclusion. There's a program in the US where the US government this year should start purchasing uranium for this uranium reserve that they've established. That's going to be a 10-year long program. The US utilities are looking to diversify away from Russia. And so what a wonderful business to be in, to have the commodity where your customers can be the US government and US utilities. This is a really fundamentally sound and positive setup.
Definitely. After 17 years, really to finish up, what is still your personal share in the company?
I'm still a top 5 largest shareholder of the company, never sold stock from my founder shares, from shares that I've added to my position over the many years. When during the tough times that we've taken salary cuts or taken equity instead of cash, etc. All those things that you need to do to really realize the vision, realize a venture that any significant business isn't just created overnight. And uranium is a long-term industry. Nuclear energy is a long-term industry. Our customers being the utility power plants, the average utility reactor today, after it's built, can operate for 60 to 80 years. This is truly a long-term business. So we've brought a long-term approach to a long-term business, and now we're starting to see the rewards. For me, as the largest individual shareholder in the company, I've always had full conviction that this was about a long-term commitment. We've demonstrated. We're not even done yet. This is just beginning. This is just getting interesting. And so I'm really looking forward to much more and many more news to come and share with you and your subscribers, Johan.
Super. Look forward to that. Yeah. Amir, thank you very much. All the best for that. And I would say USC go.
Let's go.
Thank you. Yeah, ladies and gentlemen, that was Amir Admani, the CEO and founder of Uranium Energy Corporation. You heard it. The company is in the best shape ever. No debt, $120 million cash, 4.6 million pounds of uranium physical, unrealized profits of $110 million, and 2 production facilities ready to push the button, ready to move. Uranium today, $62. Honestly, stock went from $1 to $5, but as I just saw this morning, H.C. Wainwright brought already out $7.10. My personal target is at least $9.50, the point and figure chart for the next 12 to 18 months. Longer term, we see $12 to $15. So from that perspective, really check it out. Uranium, even if we are doing this today in Germany, but uranium is hot, uranium will move, and uranium has to power us CO2 free. So thanks for watching us, and bye-bye from Munich.